welcome to the crypto jungle. My name is Baloo the Bear, and here on the channel I keep crypto simple. We look at the price in the context of volume using the Wyckoff method. If that is something that interests you, then why don't you hit the subscribe button? I stream every Monday and Friday with some videos peppered in. All right, so in today's video I want to cover Bitcoin. I mean, not a ton has happened in the markets. It's looking like the setups are beginning to present themselves, but nothing has really firmed up. We haven't seen any actionable events just yet, but we'll take a look at the market health overall, and we'll take a look at some of our favorite altcoins. So without any further ado, let's go ahead and take a look at the king of all crypto, and that is Bitcoin. Starting out with Bitcoin here on the daily. Let's get the VPVR out of the way. We are still in this localized downtrend. So because of this localized downtrend, the assumption is further downside until we can get above this downward sloping line of resistance. Again, the assumption is more downside. So big resistance for us to watch out for in this general level right here. We need to overtake the 48. Oh, it's a terrible picture there. What are we looking at? $48,000 level. We need to get basically above this 46 and close on the daily before we can begin to repair this localized downtrend. Trend is your friend until it ends. We're getting a comment in the chat here to take a look at the ETH BTC chart. We will take a look at Ethereum, and we will take a look at it on its Bitcoin pair because everybody loves altcoins. So we're at that point in the market cycle where Bitcoin is shit and altcoins are legit. So it doesn't surprise me that we're seeing some of the formations begin to present themselves in a very bullish manner in some of the altcoins. So how's my volume doing? Am I quiet? It looks like I'm quiet. Got some feedback that I was too quiet. Let me crank it up a little bit. Mic audio at 100. That is cranked. Let me see here. I will have to fix that another time. Anyways, okay, so basically what we're looking for in this structure, like I said, is we need to break this downward sloping line of resistance first. Then we need to close above this area right here. So let me get my fancy dancy pointer out here. This downward sloping line of resistance right here needs to be broken, and then we need to close and hold support on this support line right here, right at around $47,000, with that key resistance around $50,000 back here. So until we can do that, the assumption is more downside, with the potential even of getting down to $30,000. Just took a quick peek at the VPVR. We just zoom out here. VPVR, for those who don't know, is the volume profile in the visible range. It tracks all of the trading activity at certain prices. So we have a ton of volume here at around 47. That's the target that we need to overtake. We've got a lot of support down here at around 34, 33. And then below 30, there's actually not a ton holding us up here. So there is the possibility of coming down. If we do enter that kind of 30K range and scare the market, there is a potential for us to not find support until we're into the low 20s. So hopefully that is not what we would be looking at, but in this localized range, this close to a pivot low, this pivot low right here, this pivot low of the previous swing. If we fall below this pivot low right at around 39, I mean, from a technical point of view, that's where a lot of stop losses are going to be stacked. That's where a lot of liquidations are going to occur. So it wouldn't shock me to see us get down to those disgusting levels. Let's take a look at Ethereum. ETH USD. Go with the Coinbase chart, why not? Let's turn my VPVR off, don't need that anymore. Let's actually take a fresh look at this. So we had this buyer's climax here, a really large shakeout, establishing a very large range here on Ethereum. So we can go ahead and mark that range. I'll go wick to wick. Let's see what wick to wick looks like. So we'll go from the wick high, drag that across and open it down to the wick low of the seller's climax. So that initial wick low, that initial move where we did find some support. So currently sitting on a pretty interesting level, kind of dividing the two areas, the mid of the range right here. Currently sitting on support. Similar story as to what we're seeing in Bitcoin. We're on critical support. If we fall through that support, it's going to be ugly. If we fall through support here at around $3,000, we would not be finding support until we're right at around $2,000, $1,800, maybe even $1,500. So another 50% move down in Ethereum if we do lose some of these key support levels, these key support and breaking out some of these resistance, these flips, or sorry, support. Breaking these pivot supports. So if you get Ethereum trading below 2,600, do not be surprised to see those lows, those levels below. What am I doing? Not much. I'm in accumulation. Overall, these structures, to me, they are still presenting themselves as accumulation. They're very large structures, very large accumulation ranges. But you know, when we look at the volume here, this is very low volume. This is not volatility. This is not whales selling. This is just quiet accumulation of strong, fundamentally strong and bullish assets. Let's give that a little bit of a brighter color there. So I'm accumulating alongside the whales. It is what it is. If there are some dips, those are going to be by the dips. This is going to be a buying opportunity. We're still macro in a higher high, higher low structure. The fundamentals of the on-chain data are not suggesting that we are in a bear market. We are in a bearish trend, and the range, the trading range of these accumulations are vast. So it's very polarizing. People are saying, you know, when we come off a bottom, yay, we're bullish back on. And then when we come back to a top, it's bear market. So it's just the sentiment of the space right now. Lots of large volatile swings. If you are a experienced trader, you're probably having a fantastic time taking out some of these swings. They're very juicy swings. But yeah, let's go ahead and take a look at ETH BTC. This is the Bitcoin comparative. So very interesting chart to pay attention to, because there are a lot of large players in this space that don't care about fiat. They don't care about dollars. They're not here to accumulate dollars. They're here to accumulate the future of money, which is cryptocurrency, most notably, or most adopted, Bitcoin. So coming in on our backup here, very large structure of the Bitcoin ETH, or the ETH Bitcoin comparative. We had a beautiful rally out of this lower accumulation range, and we've tested this upper range here. We now have a higher high, higher low structure, which is really good. This is a bullish setup. This is looking very juicy for Ethereum when compared to Bitcoin, but just not that follow through. We haven't seen that breakout just yet. So the level to watch, the level that I think would be a very clear signal to the market here, thank you for the subs, would be this level right here. We want to pay attention to right around 0.8 BTC per ETH. If we can break above that, I'm thinking if we can get a clear break about 0.1 BTC per ETH, that's going to really trigger to the market and show that we are bullish, ready to accumulate and head off to the upside. There was a very interesting chart that came into the trading group, the private trading group last week, making the showing the Bitcoin chart in terms of inflation, in terms of the M1 money supply. Fantastic chart. I'm sorry, I forgot who posted it. I've been quite busy moving around, and anyways, I'm not going to bore you with my excuses. Fantastic chart. I'm going to have to dig it up. If you're not already in the Discord, go ahead and join the free side of the Discord. We will point you in the right direction for that chart. Basically, we haven't even broken out yet. We haven't even gotten into the bull market just yet. So really excited to see that chart play out. We're seeing these kind of unique setups, not only in the crypto comparatives, but as well as kind of the M1 money supply, the inflation rates, all of that kind of narrative that's building in traditional finance, this narrative of inflation, this narrative of asset markup. So yeah. Sir, when short. First time viewer, yo, what's up? ID 77. Oh, I'm being rated with a party of 157. I've never been rated before. Welcome to the party, everybody. Near, what do I think of it? So fundamentally, I'm not too... I have not played in that ecosystem, but the chart's actually looking quite unique. Let's go ahead and take a look at Near. Near, we'll go with Near dollar on Bitfinex. So Near has been mooning. So it's at an increased point of risk right now. You wouldn't be looking at good entries until we can get a move down to kind of the $13 mark. So it does, you know, this is the thing. When you're in a markup, let me find a longer chart. There's got to be a longer chart here for Near. Let's go with, oh, that was Bitfinex already. Let's go with OK Coin. Who rated me? I've been rated. Let's go with Binance Coin. Here we go. Here's a long chart. This is what we're after. So Near is in pretty strong markup. So I'm hearing a ton of talk about Near, and it's not surprising. We've seen incredible price appreciation. Now the optimal entry, coulda, woulda, shoulda, but didn't, was down here at around $3. Now you can see this kind of trend here where we're above this trend line. It's typically overbought. If we can get a reaction back down to the mean of this line, then you're looking at some good opportunities. Right now, we're in blue sky breakout, and it's on a really large rally. If we take a look and measure that rally, let's see here. Let's measure the distance of this rally. You know, currently it's already done a 63% move in this current rally. It's not the best time to buy if you're not the type that likes to handle the downside exposure that comes along with buying an asset that's mooning. I would much rather buy it closer to this median line right here. So typically when it does react, what are we looking at? Let's see here. So this reaction to the downside was about 50%. This reaction to the downside was about 30%. So anything between 20 to 30% reaction to the downside would be a good time to really get a consistent position inside of Near. They have their new smart contract layer, Aurora, I believe is the name. And a lot of these smart contract platforms, it's a really good place to be when you want to invest and you want to have a little bit of intrinsic demand of the utility token. The smart contract layers are fantastic because regardless of the investment side, for you to do anything on the Near protocol, you need Near, you need the Aurora tokens, you need to spend the gas. So whether you're launching a token, whether you're buying NFTs, whether you're contributing to a pool, whether you're doing swaps, whatever you're doing, you do need the underlying asset. In a short already, you know, if it's looking like, you know, that's kind of the place to be, right? We're on a 63% tear to the upside. The probability of a reaction is higher than the downside. So good on you. I don't think you'll be disappointed with that short. All right, ton of new comments in here. Welcome to the jungle, everybody. Totally missed the raid. Yeah, I totally missed it, raid. He does double stream. I do. Yes, I stream to YouTube as well. Matic looking really good. Matic is incredibly, it's really fundamentally strong. You know, it was strong before all the applications were built. Now there's a ton to do on Polygon. There's just so much liquidity going to Polygon. There's so many applications built on Polygon. It's a good one. We'll take a look at that one. Monai Secolo? Monai Secolo? I don't even know who that is. I'll have to go and check him out. Him or her. Monasecolo. Already short it to zero. Which one? Hey Baloo, long time no see. Welcome in. I don't know who you are. 333 NU. What do I think about shorting it? So, you know, I am more of a long-term swing trader. I don't typically short for profit in a bull market. I'll short as a hedge. I'll short as a way to kind of reduce the downside volatility, but I never approach a short with kind of a profit mindset. when we're in a bull market. I'm still of the conviction that we're in a bull market. So everything that I'm looking for in terms of setups, everything that I'm looking for in terms of swing trades, everything that I'm looking for in terms of investments is going to come from the long side until proven otherwise, until it's, you know, perfectly clear that we're 100% in a bear market. I'm not going to be taking those for profit shorts, because you can, the best you can do on a short is 100%. You can do multiples to the long side. So I like to focus the energy to the long setups. Thoughts on Link? Yeah, we can take a look at Link. Link USD. So Chainlink is still kind of trapped in this Wyckoff accumulation range. For those who are new to the channel, which it looks like there are quite a few, what we do here is we analyze the trading range in terms of the Wyckoff method. So the Wyckoff method is establishing a range. Got a motorcycle outside. It's establishing a trading range and watching the rallies of the reactions inside of that range. So something bullish for a setup on Chainlink, there's two ways that you could look at this. Basically, anytime we come to the lower end of the range is a buying opportunity, especially if you break the bottom of the range and get bought back up. But the second scenario to be looking for is to get that breakout, that sign of strength, and that backup on top of the range and a continuation beyond that point. This is the exact same sort of scenario that you see with something like NEAR. If we go back and take a look at NEAR, we can make a comparison. So here's the structure: rally up, large reaction to the downside, sideways trading environment, and then a rally to the upside. If we go ahead and take a look, switching gears back over to NEAR, that's what happened back here. Okay, so we'll draw the same sort of thing. We had a rally up, a reaction to the downside with a capitulation candle. You need this capitulation. Then when you have the capitulation, you're going to draw the trading range. Move that sideways. And then the buying opportunities are when it's below the range, preferably outside of the range, or you can make entries as you leave the range. So taking a look at NEAR, your entry would have been at $3.75, and we've been in markup ever since, currently at a price of, well, what are we at? 19. So, you know, from the area of the backup, even if you were late to the party on this one, you'd still be looking at a profit of around, oops, you know, 300%, 3x. That's kind of why I don't short, because you can't get a 3x to the downside. Take a look at one. Yeah, one is one that, what is one? One is one that I've been taking a look at because I'm looking at DeFi Kingdom. So for those who are new to the channel, I'm very involved in Axie Infinity. I don't stream me playing Axie Infinity because I don't want to be identified as a gamer. I'm not really a gamer, I'm an investor, I'm a crypto enthusiast, but I'm very heavy into Axie Infinity, and I've seen a lot of buzz going on with DeFi Kingdoms. So I want to get involved in that ecosystem. I want to see what all the hype is about, and Harmony is the platform that's being used to support that game. So a lot of these sidechains are going towards the gaming industry and are being you know, targeted towards gaming. Polygon is one of them, Solana is one of them, and it's looking like Harmony is also one of them. Good entry is on Booooll. Given the amount of hype, the amount of YouTube hype around that game right now, you're going to want to be careful. We'll take a look at both. Let's take a look at Harmony 1 right now, and then we'll take a look at Booooll as well. But a lot of these are pretty hyped. So see, here's another fantastic example of kind of that bump and run. That's that large capitulation, run up, capitulate, trade sideways, continue. So you can actually draw that Wyckoff trading range again right here. Where's the best two times to buy? As it breaks the bottom of the range or breaks out of the range. So you had a great buying opportunity here at around 5 cents, and you got another fantastic buying opportunity right here at around 10 cents, currently trading at 30 cents. So again, a 3x. Not saying the assets that we're looking at, it looks like there's a lot that have done a 3x. Not everything does a 3x, but it's good to see that this similar style of setup plays out again and again. So that, again, that's what we're looking at with Chainlink. Similar type setup. We just need to get that backup phase at around $31, clean break around 31, get that confirmation around 40, and you'd be off to the races. But yeah, Harmony, it's risky right now. You're going to want to buy a pullback. You need a heavy discount when you're buying an asset that's in markup. When you're trading sideways, you can accumulate. Bitcoin's trading sideways, you can accumulate. Ethereum's trading sideways, you can accumulate. Matic is trading sideways, you can accumulate. But when something has gone into the markup phase, phase E of that Wyckoff setup, you really need to, 20% plus, at least 20% plus. When everybody's telling you all the reasons why it's, going down, that's when you step in as a buyer, because the markup, the power of markup is pretty substantial. So you want to wait for those bloody days. You want to wait for those really ugly days. Like this would have been an amazing entry here on one. You got a 50% retracement in the markup phase. So that would have been a nice balance play for that one. So let's go ahead and take a look at Jewel. Jewel's not been around for a ton of time. Wrapped Avalanche, DeFi Kingdoms Tether. So we don't have a ton here. Let me see if I can pull over. Let me pull over a chart. This is another one to keep an eye out for all the Polkadot fans out there. Moonbeam finally launched with their Glimmer token. It's a VC play at this point, so you have to be prepared to take the downside price action, so don't go all in. If you're taking a venture capital play in Glimmer, keep some of your funds to either buy higher or buy lower. You need to have that hedge. You need to have that dip capital ready for something like this. But what are we looking for? Jewel. So Jewel, again, it's been in markup, man. It's been in markup. Now I haven't gotten hands-on with the game. I haven't played DeFi Kingdoms, and if you haven't, the best way for you to assess value in a play to earn game is to play it and earn some money and establish the ROI. So ROI, the return on investment. When I first got into Axie Infinity, we were looking at an ROI of around 6 to 8 weeks, which was amazing. You could buy Axies, you could buy a team of Axies, and you could play it for 6 to 8 weeks, and that gameplay paid for your Axies. Fantastic. Great opportunity to enter. The feedback that I'm getting with DeFi Kingdoms is that the NFTs are actually quite inflational right now, and you're not getting a lot of money for the NFTs. They're not producing enough Jewel. I need to get hands-on with it. So if you are able to harvest or farm enough Jewel to pay for all of these NFTs within a 6-week period, then it's probably a good investment. If you're able to pay the NFTs off in 3 to 4 weeks, then likely the ecosystem's getting overheated, which would be what I would think is happening. But again, I need to get hands-on with it. I'm not even in Harmony just yet. I haven't played with any of the applications on the Harmony network. So until I do that, I'm only, speculating secondhand. So until that happens, I don't know. I know nothing. Okay, let's catch up with the chat here. Morning, Proto Bodo. Morning, Patty. Hello. DPK, 30K would be epic. That would be fantastic if we got 30K. Not 100%. Fancy Pointer is tops. Why are you a bear? The bears survived the winter, my friends. The bears know how to forage. The bears know how to find the berries in the depths of winter. We know how to find the gems. The bulls, you got to keep feeding the bulls. You got to get the bulls excited, and you got to move those bulls around. And when the winter comes, they usually die. I've been around crypto for a very long time. I got my, my bear badge. I got my bear identity in the bear market, and it's going to stick with me. Can you do sand? Yeah, we can take a look at sand. CRV, absolutely. The curve wars is something that I'm very excited about. Send me a DM on Twitch. Any thoughts on Fantom? Fantom's great. It's a very fast chain. It's very similar to Avalanche. I do personally think that Avalanche is better, but I'm more hands-on with Avalanche. Curve is confusing me. I don't know if we are in markup or not. I do think that we are in the backup phase for Curve. We've gotten a couple Curve comments. Let's take a look at Curve. So Curve, I mean, what's there to complain about, man? We've been talking about Curve in the private group here since basically $3, and it's been nothing but up. We're in the backup phase. We're getting ready to crank up the heat on Curve. A lot of decentralized autonomous organizations, a lot of DAOs are beginning to consume a lot of the Curve tokens. Convex holds like an obscene amount of Curve. Abracadabra holds an obscene amount of Curve. There's a lot of the tokens that are leaving the supply. When you have that supply shock and you have a demand, what do you get? You get markup. So I would not be surprised to see some pretty, bullish levels here on Curve. It hasn't happened yet. We haven't gotten the full-on breakout, but this is a cup and handle. This is a cup and handle, support/resistance flip, marking up. We've been looking at this since the breakout, and we're up nearly, 100% on this. It's fine. Curve looks dandy. When in doubt, zoom out. First time viewer, bullish bullet. Can you take a look at one? Okay, yeah, exactly. Waiting for a new low top high. How soon can you identify a trading channel exists? That's a really good question. So Bald Squirrel, how soon can you identify that a trading channel exists? So in the Wyckoff method, we actually have phase A, phase B, phase C, and phase D. So there's 4 phases to a Wyckoff accumulation. Phase A and B, it's all about observing the price action. There's nothing actionable about it. A good accumulation range takes anywhere from 6 to 12 to sometimes even 18 months. And I'm talking in crypto. In equities, it takes a lot longer. It takes years. But in crypto, when you have that 6-month accumulation range, let's actually go through one that I personally like, and that's Matic. USD on FTX. If you guys are not already signed up on FTX, what are you waiting for? This is like one of the best exchanges out there. Sure, they don't have every shitcoin under the sun, but the user experience on FTX is, as well as the flexibility that you have with margin and leverage on FTX, is it's a lot. At least for my mind, it's a lot easier to manage larger accounts, larger positions. So if you're not already signed up to FTX and you want a free month in the trading group, sign up. Links below. Go to thecryptojungle.com. Where is it? Where's my little thing here? Cryptojungle.com. Go to the sign up section. There's going to be 3 different packages. Feel free to just go ahead and sign up for the monthly or the yearly. But if you want to get a free 30-day trial, all you got to do is sign up for FTX. Sign up for FTX, give me your user ID. We'll get you up and running and in the group today. So go ahead and do that. So basically 4 stages to a Wyckoff accumulation. Really good question. Let me go ahead and answer it. So phase A, and this is kind of a tight range. You know what? Oh, this is on the 3-day. Let's go to the daily. I'm going to break it down here. So we had a buyer's climax, seller's climax, automatic rally. Okay, this volatile move here, this initial volatile move, represents phase A. And what phase A is, the purpose of phase A is to establish the width of the range. A lot of people get this kind of wrong. They'll slope the range. You can sometimes. It works better in equities than cryptos, but all you're trying to do is you're establishing the trading range. Great, now you have something to look at. So I was able to look at this trading range right here. I'll draw it. So we go up to our buyer's climax. We peg that to the close. Decided to use the close on this one. We'll drag that across and we will open it up to the close of this reaction right here. Now we have a range. We have something to pay attention to. I don't like that color. That's the color I like. Then throughout phase B, you're just looking at the volume and you're looking at the price structure and the price behavior to determine, are we in accumulation or are we in distribution? Typical characteristics of accumulation, the easiest one to see is low volume and tight price spread. So you can see how the price is tight. It's not super volatile. It's like we're just kind of meandering along. It's not doing a bunch of this. It's not that's a terrible drawing, but it's not breaking the range multiple times. When you break the range, it's distribution. We're getting a lot of retail demand and you're getting whales selling. Retail demand, whales selling. When you're in accumulation, it's like, the retail can't move the price. The only people that can move the price are the whales. So when the whales aren't selling, they're just going to buy when it's at a discount. They're going to buy when you break the range. And that's basically what happens here. You break the range, retail freaks out, whales buy back in. it holds it back up again, and the overall price structure is very tight and the volume is low. There are some anomalies. This is crypto, it's in a liquid market overall, so you're gonna have these anomalies come in, but overall the price spread is quite, it's not volatile and the volume's low. Now we have a sign of strength. We have a new all-time high here on Polygon. This is the SOS, the sign of strength, and the backup. Let's throw some labels on there. So this is our sign of strength right here. Sign of strength, just breaking the trend. We have a new high. That's a signal to the market. We have a sign of strength, signal of strength, whatever you want to call it. And then we have a backup. And this backup is just this upward sloping line of support here. Shout out to anybody who took the Matic trade. We had our buys back at $1, or sorry, not $1, $2. And so currently sitting, if we're at $2, you know, even if you just became a participant at $2, you know, you're sitting pretty, liking that 14, 15% move to the upside. So definitely nice when you get in and it heads to the upside, so you don't have to sweat about your stop loss being triggered. And basically what we're waiting for at this point is just a break above this local SOS. Once you get the break above $3, you see Matic above $3, the market will probably react to that and you'll get a markup period. So phase B, sorry, I was getting ahead of myself. I'm kind of all over the place here. But phase B is basically this whole piece in the middle. And you're not really doing much. If you're bullish on the asset, you can accumulate when it breaks the bottom of the range, but there's no like entry position right now until you get to the sign of strength. So there is a little bit of a change of character right here. You could also categorize this as going into phase C. So we were trading sideways, heading down, and then all of a sudden there's a trend change, higher highs, higher lows, higher highs, higher lows, and now we're in phase C. Phase C, nothing actionable until you can get the break above. Then once you're in phase D and you break above the SOS, you're in phase E. Phase E is markup. Phase E is the exciting part. Phase E is when, you know, everybody starts talking about your coin again. Do you know something about Akala's launch date? No, I don't. Sorry, I don't know anything about Akala's launch date. Don't know what it is. Probably don't care. There's just too many coins, you know. It's not that I'm saying it's a bad project. It's just, you know, my focus is elsewhere. Can you give us the top 3 ways of learning this pattern and this technical analysis? Well, top 3 ways of learning it is, that's a really good question. I don't even know how to answer that. Time and experience, my friend. Learning to trade profitably, you know, becoming a trader as a profession is something that honestly takes years. You know, I'm not gonna sugarcoat it. It takes time, it takes experience, it takes capital. It's like anything. You gotta go to school, you gotta pay the money, you gotta do the dues, you gotta, you know, make the mistakes, you gotta make the successes, and you learn. It's a learning process. So this method can be broken down relatively easy if you go ahead and take my course. We have a whole bunch of courses in the Crypto Jungle's private server. If you do have, you know, if you have a membership, you have access to all of those videos. But there's a ton of content out there. We also have free PDFs. So go ahead, join the Discord, go to the free section. My bot will point you in the right direction, showing you to where the free PDFs are. You can self-teach. You can teach, you know, I taught myself this method. You can teach this method as well. You can teach yourself this method. But basically, you know, it's learning to establish a range. The biggest tip that I can give is give the structure time to develop. Give the structure time to develop. I'm not joking when I say that these accumulation structures take 6 months minimum. They take 6 months to really present themselves. So here on Matic, you know, we're just at the backup. We're just potentially entering phase E, and we are 240 days in. So we're nearly at a year of accumulation. A year of accumulation is fantastic. That is what you want. Bullish structure, bullish accumulation in a year. So when you're trying to like establish phase A, don't give it a month, give it 2 months, give it 3 months. Come back to the chart in 3 months. Look at how phase A and B have played out. Then begin to form your thesis. Like, I don't follow a new asset, you know, every single day. I'll look at an asset in hindsight and try to establish where we are. A good example of that is Chainlink. So Chainlink is in an accumulation, you know. Jewel or Near, they're not. They're in markup. So when you hear about a token, you're going to go and you're going to check the chart, look at what phase it's in, where it potentially is. Is it in markup? Because that's a very different trading strategy. Is it in an accumulation? If you believe it to be an accumulation, what phase is it in? And then you can begin to potentially, you know, look for those setups. I take 2, maybe 3 trades a year. I don't take a ton of trades, but the trades that I do take are relatively low risk. They're those investment style long-term swing trades, and that's my bread and butter. Good speech. I talk too much. Okay. Yeah, just Google Wyckoff accumulation method and you can find it for free. Absolutely. Wait, I've also got, you know, the first page of Wyckoff accumulation in my server, plus a ton of other stuff and free videos and shit. Okay, thank you. Yeah, let's take a look at FTM. We got a request for FTM. So FTM, I honestly think that this is going to go into accumulation. So the development that's happened on this chain is great. There's a ton of products being built on FTM. This area right here at around $3.15, it's big resistance. I would speculate that we're going to come back down to this level right here at around $1. $1 would be what I would be happy to be a buyer at. It doesn't have to happen, but this resistance is really, it's strong resistance. So you never go long underneath resistance. You're not going to want to long or take a long position with Fantom at these levels. Now, that being said, if you want to use the Fantom ecosystem for research, you don't need to take a big position, right? You're just paying for gas. It's a very cheap chain. You only need $10. Buy $10 worth of Fantom, start using applications on the chain, start, you know, moving over assets, whether it's, you know, USDC, whether it's DAI, whether you're playing on Olympus or any of those, you know, whatever you want to do, just go ahead and explore the pools, go ahead and explore the investment opportunities that exist on the Fantom ecosystem. But as far as taking a position in Fantom, you're underneath resistance. So until you can get above resistance, you know, there's really, I would much rather pay a higher price up here, holding on top of previous resistance, now support, than, you know, taking a position underneath resistance. You know, if anybody's wanting to short, the technical setup that you're looking for here is, you know, we're underneath resistance, you short it. So again, that's kind of not my style. I don't short in a bull market, but you can also see that we have a bearish divergence here. You can see we have higher highs and we have lower highs on the RSI, quite a substantial mark as well. So there is some bearish divergence developing underneath resistance point. Don't ever take a divergence as gospel. The divergence alone means nothing, but the fact that the bearish divergence is occurring underneath a resistance, that's an important, noteworthy thing to pay attention to. So if anything, there's a shorting opportunity here. Fractal divergence, I don't even know what that is. Never heard of it. Too many terms out there, man. How would you describe the current trading range phase of Fantom? I would say that this is phase B. The range is established. Let's start over here so you guys can look at it with fresh eyes. So we have our buyer's climax here. I'm going to use the close. Let's actually turn the line chart on. It'll be very clear. We got the close. We'll drag that across and we're going to open it up. So we have phase A, basically. Phase A looking at a phase B. So if I was a betting man, if I was a speculator, if I was going to say, I think we'll probably end up trading down to kind of the lower end of the range here, right at around $1.25. get one wick that scares the market. That's your buying opportunity, and then we'll probably head back up into a markup phase. I cannot put a time on this. I cannot put a price on this. You just have to kind of observe these things as they happen. So the level that you would be looking at for is kind of the midpoint of this range, right at around $2.25. It'll probably stay range bound there for a while. If it can't hold that level, it's going to go to $1.25. If it's at $1.25, anything below $1.25, I would be a buyer. I've been looking to get into Fantom for a while. I'd be looking to be a buyer at those levels. Same sort of thing that's happening with Avalanche. Like Avalanche is in a very similar structure. Avalanche had a nice markup, nice amount of user adoption, network, development, and a lot of applications being built. So that intrinsic value kicks in as everybody's got to all of a sudden buy Avalanche to create their LP tokens and this, that, and the other. But those LP tokens have been created, those positions have been made, so we're going to be in accumulation. If anything, people are getting free tokens now, so there's selling pressure. No, I am not located in the US. I'm actually nomadic. So currently I'm in Mexico. I will be in Thailand in the spring. I don't have a home base, so I just move around. So no, unfortunately, it's not available to the US citizens. There is FTX US, but as far as, getting the 30-day discounts, there's nothing really I can do. Recommendations for you US peeps? Yes. So Coinbase, I get it. Coinbase is expensive. It's a great fiat onboard and offboard. Use Coinbase to get your crypto and move it to other exchanges. FTX US isn't terrible, but I hear people get a lot better of a user experience on Coinbase, Coinbase Pro. And then if you are wanting to play with the shit coins, you can go to KuCoin. I hear that they're kind of lax over at KuCoin. You didn't hear that from me. But, the things that I kind of get more excited about are the decentralized applications. So if you get yourself some Ethereum or Avalanche, whatever, and you start playing with the decentralized products, I'm much more bullish on the decentralized world of finance, the permissionless finance, the permissionless exchanges. It's honestly the best bet for the US people. It takes some getting used to, for sure. It takes a lot of learning. Make this a little brighter. But this is the future. This is what we're doing here. This is what we're doing. This is what crypto is for. So play with the decentralized stuff. Play with the sushi swap. Sushi swap's never gonna KYC you. Sushi swap's never even gonna send you a fucking email. Play on the blockchain, man. Play on the blockchain. Do I think it's gonna be Chop City for another month? There's a potential. Absolutely a potential. Flipping back over to Bitcoin. Bitcoin's looking like shit. In the localized range, Bitcoin is shit. Until we get above this downward sloping line of resistance, it's more chop, it's more downside. There's no way around that. Now we can break out above this tomorrow and my bias flips. Now my bias is bull. Now my bias is Chop City. No, it's not going to be Chop City. We have a potential of breaking the trend. But as long as we're under this line, there's really nothing to get excited about. Atom is also a big project in the week, 55 to 60 coming. Yeah, we can take a look at Atom. Actually, I got to get out of here. I got to get into the virtual classroom. I don't have time for Atom, but I agree. Fundamentally, Atom is a very special project. It's kind of like Thorchain, Rune, Thor swap. These atomic swaps, the layer zero. I actually didn't know what layer zero meant. In my world where I come from, that's an atomic swap. But now I guess the new terminology is layer zero. So yeah, Atom is an important project, especially if they get user adoption. Really important project. Rob Shambi, hello. Distant Reiki healer, good to see you in the chat. Martin Corey, good to see you. Read it, study it, repeat. The process just is about tuning it. It will start to make sense with practice. Really good feedback there, Bear Crow. Atom has an unlimited supply. It doesn't matter. It doesn't matter. Let's actually take a look at the tokenomics here. So it's about the emissions. It's about the emissions. You know what else has an unlimited supply? Doge. Now, I'm not saying Doge is a good project, but let me kind of explain what I mean. I'll actually use the example of Monero. So XMR, okay? So you need to, I don't know enough about Atom. So Atom, I don't know how the supply works, but you know, Ethereum has an unlimited supply as well. So there's other metrics that go into it. Is there an inflation and burn? Infinity doesn't mean anything to me because you need a currency to be able to inflate. I actually do think that that's a little bit of a flaw in the Bitcoin thesis, even though I am, you know, very bullish on Bitcoin. Here's how it works. So Monero has a fixed amount of supply that enters the market each year. Now you may be thinking to yourself, well, why would we want to just continue to print coins and coins? But the thing is, it's still deflationary because as the supply expands, that inflation decreases. So if we have, let's say 100,000 coins every year, we mint 100,000 coins on Monero. And 1 year that represents 2% inflation. Now you take a few years down the road, it's still 100,000 coins being minted. So a few years down the road, it's not 2% inflation, it's 1% inflation because the total supply has grown. You kind of need to have an incentive. Miners, anything that's proof of work, man, brain fart. Anything that's proof of work, you have to be able to secure the network. And the only way that you secure the network is through inflation of the supply. There needs to be a block reward. There just has to be. There has to be a continuous supply for the miners to want to have an incentive to upkeep the network. Proof of stake does not need that. Proof of stake doesn't need it. Proof of work does. And they're two different things with very different applications. Proof of work has its place in this world. Proof of stake has its place in this world. So just because it's infinite supply doesn't mean that it's necessarily a bad thing. You do want to take a look at the emissions though. How much is being minted, how much is being released, how much is being vested, all of that kind of stuff. Because if it's like a 20% inflation per year, yeah, that's a shitty investment. But if it's 2, it's better than what we got currently. $40K is the new 30. I like it. All right, guys, I have to get out of here. I got to get into the virtual classroom. I'm going to have to check out who raided me. So I'll go ahead and check out your channel. Thanks for the raid. And welcome to all the new viewers here. If you guys enjoyed this content, please leave it a like. Don't forget to subscribe. And for those fellows on Twitch, thanks for the follow. And until next time, please trade safe. It is a jungle out there. Peace.